Joe, good to see you. How you doing? Evening. How you been? Pure, good to see you. So how you doing? How you been? Evening. Kerry, good to see you. So how you doing? How you been? Evening. Pablo, good to see you. So how you doing? How you been? Funky brother, good to see you as well. How you doing? Evening. How you been? How's everyone doing today? Good, bad, or just starting out, depending on where you are around the world. Come on, good to see you, so brother. How you doing? Dennis, good to see you. So how you doing, brother? How you been? Happy Pisces, good to see you. So how you doing? How you been? So let's do a breakdown of what we're going to be talking about on tonight's live. It's good to be back. Missed everyone. Welcome back, Miles. Let's go, funky brother. Good evening, Miles of CMF. What do you think about the next BTC scenario? There's a lot of scenarios playing around. There's a lot of banks around the world giving out different scenarios right now. You have Morgan Stanley, but the scenarios are similar, you could say. Morgan Stanley, Standard Chartered Bank, Deutsche Bank, a lot of banks around the world, even outside the United States, have been given their perspectives on the BTC market space. In terms of the elections coming up, all the geopolitical tensions is rising right now in the Middle East as well. You said you would make it up. You will make up to everyone on Monday. What news are you hiding in the chamber? Let's go. Where have you gone? Sorry, I had a lot of things to do regarding coin, but I am back. Let's go. Now, let's do a breakdown of what we're going to be talking about on tonight's live. And by that time, everyone's tuned in for the first part. So, on tonight's episode of the CMF Live, episode 190, which is absolutely amazing to see. So, on episode 190 of the CMF Live, we're going to be talking about Morgan Stanley. We're talking about Morgan Stanley's new perspective on the market space and, essentially their new reports coming out of who's going to win the elections, essentially the inflation situation playing out, and so on. And then we're going to be talking about Bitpanda essentially going IPO, which is amazing news to see. And then we're going to be talking about HBAR on tonight's live as well. HBAR essentially getting a new license in Dubai to operate even further. And I'll be telling you what areas they can operate even further in. We're also going to be talking about another bank that's just green-lighted crypto assets as well by the name of FV Bank. We're also going to be talking about Van Eck on tonight's live as well. Van Eck managing essentially $108 billion has just revealed post-election Bitcoin rally and BTC predictions as well for the market space. We're also going to be talking about on tonight's live another essentially pension fund, or you could say an investment that's been going towards Bitcoin ETFs, and I'll reveal who that essentially institution is. We're also going to be talking about BlackRock on tonight's live as well. BlackRock has been scooping up the amount of Bitcoin ETFs they can possibly get their hands on. I'll be revealing their new data on essentially how much Bitcoin they essentially own right now. We're also going to be talking about on tonight's live regarding US crypto regulations, which is the most important thing that's been missing from the United States for the longest time. Congress had a sit down on regarding crypto regulations when it comes to holding crypto assets, staking crypto assets, investing into crypto assets. We're going to go through that on tonight's live as well. We're also going to be essentially going through on tonight's live regarding the matters of Bitcoin as a legal tender, because one country has just decided to follow the footsteps of El Salvador and make Bitcoin a legal tender in Latin American countries. We're also going to be talking about the Bank of England on tonight's live show as well. The Bank of England has decided to essentially greenlight even further into their CBDC project, even further into their digital IDs. We're also going to be talking about on tonight's live regarding a particular crypto asset, which I've said for the longest time is an amazing asset that everybody should look into. And this blockchain, essentially this crypto project, has decided to create its own blockchain. Now, it does operate on one particular chain, but essentially decided to create its entirely new blockchain to operate upon. So I'll review what that crypto asset is when we get to the news. We're also going to be talking about tonight's live regarding the Hong Kong Monetary Authority, because the Hong Kong Monetary Authority has just partnered with Brazil, Thailand, and a few other countries for tokenization prospects. We're also going to go through the news topic on tonight's live regarding Tether, USDT. Tether essentially has waving the white flag, you can say the white flag of, essentially surrender to the US market space. We're also, or the US government, you can say even. We're also going to be talking about tonight's live regarding the matters of India and Ripple and XRP. Once we get to that news, I'll reveal what I mean. We're also going to be talking about on tonight's live regarding the Bank of International Settlements. The Bank of International Settlements has just essentially announced they're advancing into their cross-border project payment solutions. And we're going to be going through essentially the bullet points on that topic as well. So before we go through any of those topics, and the first topic we're going to go through on this live is regarding Morgan Stanley's new report coming out of how they think the market space will play out regarding the elections coming up, the inflation situation, or even the geopolitical tensions that's going on market and in general, essentially on Bitcoin and in general, the entire crypto space. Before we go through that news, I just want to say to everybody, welcome to the CMF Live. If you're watching this for the first time ever, welcome to the CMF Live. My name is Miles. I'm going to be a host as I am every single night. We are back, and I'm so glad to be back as well. It's amazing to see everybody inside the live right now. And then on this live, you can tune in every single night where I talk about the most recent news that's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. Now, obviously, the live show has a disclaimer as well, just like always. Not financial advice, not political advice, and whatever I say is only for entertainment purposes. We also do live Q&As as well, which means if you have any questions, don't be shy, put them down inside the comment section. We're more than happy to answer the questions you may have. And I want to take essentially a moment to say thank you so much to everybody right now who's retweeted this live right at the beginning of the live show, notifications. Thanks so much to everyone that's watching this right now on X, retweeting this live show, putting a comment outside the video, and liking this live show on X as well. Thanks so much to everyone on YouTube who's watching this right now and liking this video as well right at the beginning. So before we go for the first news point regarding Morgan Stanley, let's go inside the comment section first. Let's see where we are at. Good evening, Miles of CMF. Free and forever. Good to see you. How you doing, brother? How you been? Hello, CMF and family. Comatose. Good to see you. How you doing? Sorry for being late. Nice Nice volleyball game, but hello, CMF. Let's go, Semper. Hello, Miles and family. T. Good to see you. How you doing? What do you think of Phantom and Arrow Finance? Speculative assets. It's not an asset that I would be going into in any sort of a way. I would say there's better assets out there to be looking into. Bitcoin, huh? Yep, Bitcoin. Good evening, Miles, and all the CMF. Looks like a lot of people are taking their money out of Tether. Seems like it a bit. Good to see you, Miles, and the CMF. Lena, good to see you. How you doing? Evening, Miles, the CMF. Jason, good to see you. How you doing? Hey, brother. Dale, good to see you. How you doing? How you been? So, the first topic on tonight's live is regarding Morgan Stanley. Morgan Stanley cautions essentially high stakes that the US elections could impact market volatility. Morgan Stanley, a leading financial provider, has shared essentially different opinions on how the elections will affect the crypto markets, while the investors await essentially crypto assets to react positively to the upcoming US elections. Morgan Stanley team essentially has a different perspective on the market space. They just introduced their new report today on how they think the market will play out. So, in their recent report from Morgan Stanley, the lead analyst at Morgan Stanley, Monica and Daniel, essentially project that the US elections combined with the macroeconomics events might affect the crypto market space. The analyst noted that pull and push investor sentiments is what's going on regarding the US elections. Of what's going to be the outcome. Is it going to be Trump or is it going to be Kamala? Now, they've essentially given their perspectives of how the market could play out if Trump becomes president, or sadly, if Kamala becomes president. Essentially, they said the analysts noted that the pull and push investor sentiment on the US election outcomes propelled the crypto prices to new heights. They argued that the political outcome and policy changes might positively essentially impact the crypto market space, but the businesses and the economic cycles might react differently. This implies that the predictions of the US, essentially next US presidential elections coming up, drives the change inside the market space performance even more. From their vast experience, Monica and Daniel urged the investors to be vigilant at this moment in time and embrace long-term strategies rather than relying on election outcomes. They essentially envision that most crypto assets will plummet if the election results are released after the essentially dates agreed. Now, the analyst also explained that if the results are not announced on the agreed dates, the crypto sector will enter a period of uncertainty where the markets will essentially experience prolonged volatility, citing data from prediction markets. And Daniel essentially and Monica noted that the Democratic and Republican candidates are in a tight race. They demonstrated essentially counting the elections and releasing the results may take longer than possible. If this happens, Morgan Stanley anticipates the delay in election results might create a heightened speculation among the communities, dragging most assets into the red zone. However, before November 5th, the analysts also projected that the campaigns will heat up, with each candidate showcasing their sustainability, essentially to ascend to the power. Now, the analysts also noted as the US awaits the October surprise, a political event that might impact the election outcomes or delay the voting or counting, or the crypto markets will become volatile. The analysts also warned investors to deploy long-term objectives during the US election period times. And Morgan Stanley's predictions came days after Standard Chartered team also projected that Bitcoin could surge quite high numbers if the Republican candidate won. The giant bank anticipates Bitcoin will reach $73,000 during the voting days and hit $125,000 if Donald Trump becomes the next United States president. Even Morgan Stanley has said basically that they see if Trump becomes president, the market will be positive. You know, from every report that I've been reading, from Deutsche Bank, from Morgan Stanley, or from essentially any other essentially firm out there, even from VanEck, all the analysts have all came out and said Trump needs to win for the market to be positive. Not just crypto, but in general, the market space needs to be positive. The economy needs to be positive. And every single report coming out from these massive billion-dollar firms, it's all indicating Trump needs to win. The Standard Chartered team also projected that Bitcoin will register at 4% intraday gains and 10% essentially weekly gains during election days. The bank also urged that Bitcoin would experience a brief drop before a rebound if Trump is appointed winner. Essentially, they anticipate Bitcoin will reach $75,000 if Kamala wins, but $125,000 if Trump wins. The Americans are essentially optimistic. And it's not going to be overnight type of scenario, but it's going to be climbing to those numbers. The Americans are optimistic the new president will abolish essentially Biden's anti-crypto stance. For the past few months, over 1 million crypto users have vowed to support the presidential candidate who's willing to challenge Biden's anti-crypto stance and embrace the friendlier policies when it comes to digital assets. The Morgan Stanley and Standard Chartered Bank's predictions demonstrate the need for investors to be essentially prepared for the US elections coming up. And the analysts believe that the elections outcomes will have far-reaching essential implications for digital assets. Now, as I said, Deutsche Bank, Morgan Stanley, Standard Chartered Bank, and a few of the reports from different banks have came up. Even Wall Street spoke about this matter as well, regarding if Trump wins, what happens to the market space? If Kamala wins, what happens to the market space as well? And what's a little bit different from Morgan Stanley's report compared to the rest of the reports that came out is Morgan Stanley essentially said that just in case the other side wins, Morgan Stanley has indicated if Trump wins, the market will do very well for itself and start moving on to higher numbers. But Morgan Stanley's report also said that essentially investors should be cautious when it comes to movements inside the market space because the other side could possibly win. Kamala might win, which means the market will start essentially climbing downwards. And essentially Morgan Stanley is giving a warning to everybody that if Trump wins, it's good news, and if Kamala wins, it's bad news, so be prepared for either predictions. Now, what we're going to be talking about next on tonight's live, moving away from the Morgan Stanley report that just came out today to essentially a crypto exchange going essentially IPO. Now, IPO is very important for the crypto space in general. Every company inside the crypto space needs to go IPO, especially any company that wants to become some massive organization inside the crypto space. And the crypto exchange Bitpanda is next. So before we go through that, let's go inside the comment section first. Let's see what's going on in there, and then we go through essentially the IPO of Bitpanda. Good evening, Miles of CMF. Orphan, good to see you. How you doing? How you been? Javot, how you doing? Hi, Miles. Was wondering what antivirus software do you use for your phone and which one is the best for Android? The best one for Android is McAfee. Without a doubt, it's McAfee. AVG is also good as well. It's free if you want to use it. How can I keep futures trading if I can't use USDT? You can still use USDT, but futures trading, you can do it on USDC if you want to do it on Coinbase instead. Miles, I've just blocked some immature little kids. Thank you so much, Funky Brother, for that. Thank you. Hi, how you doing, Gavin? How you been? Miles, I've just sold my car and I have a spare $10,000, £10,000. What do you think I should look into? Not financial advice, just suggestion. The financial projects. Always looking towards the financial projects because the market is moving. Essentially with Trump coming in, we're going to have a lot of policies and regulations inside the crypto space, which means the utility part of crypto assets can start making a move inside the United States. So I would say aim for the financial projects. Can I, not financial advice, obviously, can I buy the rumor and sell the news? Yes, you can. You can always do that. When it comes to the market space, there are multiple methods you can use to be, essentially outsmart other people inside the market space. One of the simplest ones is buy the rumor, sell the news. So if Morgan Stanley's report coming out saying be cautious, if Trump wins, it's excellent. The market starts climbing upwards. If Kamala wins, the market starts climbing downwards. And you can buy the news and essentially buy the rumor, sell the news if you want to do on that. Not financial advice again. Trump is going to win. Let's go, JP. Good morning, Miles and CMF. Manny, good to see you. Well, how you doing? How you been? Grand Rising CMF. Ray, good to see you. Well, how you doing? Good evening, Miles and CMF. Mike, good to see you. Well, how you doing? I think Trump and Elon Musk together can reduce the American debt as they are both business-minded people. I agree 100%. If you're going to put two people in charge of a country, there's no better candidates or better options than essentially Trump, who's business-minded, and also essentially Elon Musk, who's intelligent and business-minded. I agree 100%. Miles, you has a top 50 coins or different entries now. It's similar, just a few minor differences. Hello, Miles. How are you today? Good to see you as well, Scott. How you doing? How you been? Miles, you recommend some coins to research? Yes, ACH, if you still haven't. And you wonder why Ripple chose essentially Bitpanda going IPO. Exactly. Now, regarding Bitpanda, crypto exchange Bitpanda has weighed in the idea of going IPO and sales options as well. Bitpanda, a cryptocurrency exchange sponsored by essentially Peter Veller's Ventures, is considering an initial public offering IPO on the Frankfurt Stock Exchange or a sale, according to people familiar with the proceedings. The Vienna-based company is collaborating with Citigroup and JP Morgan Chase on a strategic assessment which could value Bitpanda at more than $4 billion if it goes forward. However, deliberations continue and no final decision has been taken according to sources yet. The interest in an IPO or sale comes as cryptocurrency markets are boosted by regulatory essentially approvals for spot Bitcoin ETFs that previously happened inside the United States, which has bolstered investors' interest in digital asset firms. Furthermore, the market anticipates of a pro-crypto posture in the approaching US presidential elections coming up. Bitpanda, an Austrian fintech company, was founded in 2014 and allows retail trading in cryptocurrencies, equities, derivatives, and commodities also as well. In August 2021, the firm was valued at $4.1 billion after raising essentially $263 million from high-profile investors such as Peter Veller's Ventures, billionaire Alan Howard, and Redo Ventures as well. Bitpanda also anticipated record earnings for 2024 in May after generating more than $100 million, 100 million pounds, 100 million euros in revenue in the first quarter. Following a tough 2022 with losses over 130 million euros, the company generated pre-tax profits of 13.6 million euros last year, indicating a solid financial comeback. And the company also recorded record essentially revenue growth in early 2024 and expects further profit milestones to happen, boosted by features like their real-time transfers for German clients via Deutsche Bank. Now, regarding any company going IPO is a great idea inside the blockchain space, because if these companies inside the crypto space, the blockchain space, if they want to essentially survive anything that's thrown at them, if all these blockchain companies want to work hand in hand with the traditional financial space, then they need to go IPO. There's no way around it. Any of these blockchain companies, all these blockchain exchanges, all these blockchain companies like Ripple and so on, they all need to go IPO at one moment in time, because these companies are going to be racking in so much amount of money, which means they can't stay private for too long. They have to go IPO because some people want to also be involved in dictating the path of those companies. Let's just say, essentially BlackRock or Vanik or essentially Franklin Templeton, Goldman Sachs, and just list goes on. But these companies need to go IPO. It's the only way for these companies to be able to have a long, prospering future ahead of themselves. They need to go IPO. So Bitpanda going IPO is actually a great idea. Coinbase did the best move ever going IPO earlier on. The moment Coinbase essentially went IPO, what happened next? BlackRock started using them as a custody. Going IPO for any blockchain firm is a great idea because the other companies in the traditional market space want to control the digital space as well. Now, that might be seen as a bad thing to everybody else, but if they want to survive, these blockchain companies, they need to go IPO. So the big boys can have a piece of the pie, if you know what I mean. Now, is ACH one of the best? It's one of the best to look into, definitely, without a doubt. Miles, what you think of AVAX? AVAX is great as well. Very essentially underrated when it comes to AVAX. Everybody looks towards Solana or the base network, but AVAX is extremely underrated, works with a lot of banks and a lot of financial departments, and they have a lot of licenses as well. Now, HBAR is what we're going to talk about next. HBAR's adoption expands as Dubai launches digital, essentially, will solutions on Hedera. So Hedera is something that we rarely talk about because there's rarely any sort of major news around it, but this is quite a bit of a major one regarding HBAR. The Dubai Essentially International Financial Center, DIFC, announces integration of Hedera's hashbar technology, which will power new digital assets, will also inherit solutions. This initiative is distinct from the traditional fintech focus like tokenized assets and payments, thus marks a unique application of distributed ledger technology, DLT, in essentially estate plannings, especially for digital asset inheritance. So Hedera can step up their game right now inside of Dubai market space with this new licensing. Managing digital assets inheritance is a new challenge. Unlike conventional wills, the distribute of stocks, cash, and gold as a result of the DIFC courts have chosen Hedera's technology for its reliability, security, speed, and most importantly, trust. Hedera has just been given a green light in the most simplest way by Dubai, essentially. Dubai's essentially departments to be the backbone of inheritance. So if anybody passes away and wants to pass down their inheritance, Hedera has just been chosen for that task, which is massive. Moreover, the governing council of Hedera provides the DIFC and beneficiaries a complete peace of mind via trusted, transparent processes. Some of the key features of Hedera, like the Hedera Consensus Services, HCS, have played a crucial role, essentially, in offering audit trails at every step along with accuracy. This helps to ensure that the current management of inheritance, for example, the HCS real-time audit logs, prevent mistakes in transferring assets to the wrong people, safeguarding beneficiaries from potential delays or errors, and the DIFC move highlights Dubai's forward-thinking strategy in building sustainable digital asset infrastructures and regulations, setting a standard for digital asset plannings. This collaboration is a win for both Hedera as a DLT trader, as a leader, and Dubai's is also vision for long-term responsible digital asset growth. The Hedera ecosystem is currently seeking strong growth as several industries players are willing essentially to transition to blockchain tech and prefer Hedera for its transparent governance and trust. And earlier this month, the investment firm Canary Capital also announced the launch of the first HBAR trust in the United States. This fueled further speculation around the potential introduction of a Hedera HBAR ETF somewhere down the line. But also to put in perspective, the Canary HBAR Trust will provide a safe access for investors to cryptocurrency HBARs while opening the gates for institutional participation inside the crypto space. Stephen, the CEO of Canary Capital, highlighted that HBAR Trust is designed to provide U.S. institutional investors with new opportunities to tap into the growing demand for crypto-related products. On the other hand, also, Prove AI recently launched its artificial intelligence products on the Hedera blockchain, allowing business to secure, manage, and essentially their AI training data. And furthermore, Hedera will also provide governance solutions for businesses interacting as well on developments. Look, all in all, it's massive news regarding Hedera, because Hedera has just been chosen for the backbone of inheritance by Dubai. Dubai's organization of DIFC has just greenlighted and licensed Hedera for any sort of inheritance to be moved on-chain on HBAR, which is massive news for HBAR, to be fairly honest. Now, moving on from the HBAR massive announcements to a bank that's just greenlighted essentially crypto assets to merge with the traditional market space. Now, FV Bank and Visa launch new cards to merge crypto and USD together. FV Bank and Visa have partnered to introduce new debit and corporate expense cards, which were essentially announced at the Money 2020 Las Vegas event that's going on right now. FV Bank's new Visa card lets customers spend fiat and digital assets globally, marking in a first integrated banking and crypto solutions for individuals and businesses. According to the bank, these cards will allow FV Bank customers, both in the US and internationally, to access and spend funds from the traditional USD and digital asset balances, offering global payment options for millions of locations. With these cards, FV Bank clients can spend or withdraw cash from their bank accounts, either through traditional funds or by converting digital assets such as Bitcoin, Ethereum, and stablecoins like USDC. And this means that users with cryptocurrency held in FV Bank custody accounts can now instantly convert and use their assets in real-world transactions. The bank also principles of Visa memberships also ensures cardholders have access to various payment methods, including tap to pay, chip, and Megastripe. Now, corporate clients benefit from these expense cards as well that allow companies to set spending limits, authorize specific users, and track expenses in real time, all manageable via the FV Bank app. So FV Bank has essentially been greenlighted to offer banking services for crypto assets, which is again massive news coming up, a massive event that's going on right now in Las Vegas by the name of 2020. And they just announced FV Bank is going to be giving everybody essentially access to be able to spend their cryptocurrencies using their Visa bank cards, their traditional Visa bank cards, and they're also going to be offering this service to their institutional clients. It's great to see more and more banks are coming on board and essentially greenlighting crypto spendings and essentially getting involved inside the blockchain space. It's always amazing to see regarding more banks getting involved. But it's also amazing to see they're greenlighting it for their institutional clients as well, not just their retail section. Now, what we're going to be talking about next is Van Eck. What HBAR is doing behind the scenes is amazing. I agree 1,000,000%. Now, what we're going to talk about now is Van Eck. Van Eck, managing $108 billion, has just revealed post-election Bitcoin rallies and BTC predictions as well. So we went through essentially what Morgan Stanley thinks about the market space, what Standard Chartered Bank thinks about the market space, what Deutsche Bank thinks about the market space. Now we're about to go through Van Eck's perspective. Van Eck, managing $108 billion, has just revealed their new report. Matthew, the head of digital assets research at the $108 billion asset management Van Eck, has expressed an optimism outlook for Bitcoin and cryptocurrencies in a recent interview he did with CNBC. So essentially, the asset manager at Van Eck went on CNBC and was asked multiple questions. Simple as for you. He was asked multiple questions of how he thinks the market space will play out, of who's choosing for the next presidential election, geopolitical tensions, and inflation scenarios. So, citing the upcoming U.S. elections as one of the key catalysts inside the movement, inside the market space, Matthew essentially pointed out similarities between the current market and the environments in 2020 when Bitcoin saw a strong post-election rally. This is what he said at a CNBC interview, the head of digital assets at essentially Van Eck. This is a very bullish setup for Bitcoin heading into the elections, Matthew said, drawing parallels from the previous election cycles in 2020. Matthew noted that Bitcoin experienced a low volatility leading up to the elections and then staged a significant rally after the results were announced. Matthew noted that new buyers are constantly entering the market space, setting a stage for a potential price rally once upon the election results are in. Matthew also essentially outlined a bold prediction from Van Eck that sees Bitcoin as a global reserve asset by 2050. The firm expects Bitcoin to reach a price of $3 million by the next few decades, driven by increasing demand and fixed supply of 21 million coins. Now, we've heard many predictions on Bitcoin, $100,000, $150,000, $250,000. We've even had the prediction of $1 million before on Bitcoin. Obviously, none of these scenarios are overnight. But this might be one of the biggest, boldest predictions ever, $3 million, but they're saying it in the next few decades. This comes from Van Eck. Bitcoin as a reserve asset could be a response to the risk of devaluation faced by traditional currencies. Bitcoin's recent rally to over $68,000 earlier today marks a 100% increase in the past year. Matthew attributed the surge and a part of the rising odds, essentially, of the pro-crypto candidates Donald Trump winning the US elections. And essentially, he said Trump is clearly more pro-crypto and more pro-Bitcoin, Matthew said, comparing Trump's stance to Vice President Kamala Harris, who has yet to be essentially setting some sort of a clear standard of what crypto assets are. Matthew noted that Bitcoin's long-term price action is correlated with money supply growth and negatively essentially correlates with the US dollar. The recent turnaround by the Fed, which led to the acceleration in money supply growth, may be affecting the ongoing rally. He also pointed out that Bitcoin sell-offs following an asset seizures by the US and German essentially governments were events that temporarily suppressed essentially the price, but have essentially been erased so far. During the interview with CNBC, Matthew also highlighted a key geopolitical essentially trend that's happening right now. The growing influence of the BRICS countries. Matthew explained that combined GDP of the BRICS will surpass the G7 countries, with an addition of 6 new members by 2024. Some of these new members, including Argentina, the UAE, and Ethiopia, have launched state-backed Bitcoin mining initiatives as well. And Matthew also noted that Russia's sovereign wealth fund plans to invest in regional initiatives to create Bitcoin minings and AI infrastructures across BRICS, which they aim to essentially embodying global trades in Bitcoin. The move signals a growing urgency among countries outside the US to find alternatives to the US dollar in the face of what he called a responsible physical policy inside the US. So even Van Eyck, as head of asset management, going on a CNBC interview, essentially stating that if Trump wins, market is good news. If Kamala wins, we're going to be dumping very fast. You know, there's not been a single person, except Mark Cuban, there's not been a single person that has brain cells and money from Wall Street who has backed Kamala Harris. Every single essentially CEO, executive, head of digital assets in any company inside of Wall Street, every single one of them have stated the exact same words from Wall Street, which is Trump wins, markets going up. Kamala wins, markets going down. And they've all talked about the crypto market space specifically. They said if Trump wins, the crypto market is going to react in a positive way. If Kamala wins, the crypto market is going to react in a negative way. That could also be due to some of the speeches Kamala Harris has given. One of the particular speeches that Kamala Harris did give to a CNBC interview was when a CNBC interviewer asked Kamala Harris, would you have done anything differently the way Joe Biden essentially did throughout the years? Now, keeping in mind, everybody always says that Kamala Harris was only the VP. She has no power. She has no voice, is what everybody will always tell you. She's only the VP. But when Kamala Harris was asked the question by a CNBC interviewer, would you have done anything differently if you were essentially in Biden's position throughout these years? And she said no. But to add on top of that, she also said, I played a big role into everything. So for all those people that are backing Kamala Harris and saying she's only the VP, she has no opinion, she has no voice, well, you're wrong. Because even according to her, she was a vital person inside of all the decision makings that went along, and she's happy with the results essentially throughout the United States. She's apparently happy with the inflation, because that's what the answer essentially reflects. When you're asked the question, because the US went through a complete shit show for about 3 to 4 years, with high inflations, with essentially gas and all-time high prices, groceries all-time highs, mortgage all-time highs, loans all-time highs. Everybody's feeling the struggle and the pain inside the US and the entire world. And her answer of, would you have done anything differently? No. So she's essentially, and she said, essentially, she played a vital role in every single decision making. So you're basically telling the entire world, you're happy about the inflation, you're happy about how the economy is, you're happy about everything, even though the numbers will show otherwise. But people will still back her and say, well, she's only the VP. She has no voice, no opinion. But according to her, she had a big voice in every vital decision. Her words, not mine. But yeah, not a single person from Wall Street is backing Kamala Harris. Not a single person. There's not been a single Wall Street head that's came out and said, if Kamala wins, market's going to be good news. They've all said market's going to be tanking. Instead, if Trump wins, market's going to be reacting in a positive way. That should tell you big things. It should speak volumes. What H for? Yeah. Carol, good to see you. How you doing? Miles, will you sell if Kamala wins? Hell no. I'm not going to be letting that essentially incompetent person sway me from my decision making. ACH is best or SUI? ACH. I'll tell you why the more we go throughout this live. But ACH, definitely. Now, a university inside the United States, moving off from the reports coming out of Wall Street to a university. A university has become first college, essentially, in the United States to invest in the Bitcoin ETFs. One particular university has decided to tiptoe into the Bitcoin ETF space, and they're happy about it so far. Emory University has made headlines by becoming the first college essentially entering the Bitcoin ETF space. According to the regulatory filings dated October 25th, Emory University has over 2.7 million shares of Grayscale's Bitcoin mini trust, worth over $15.1 million. Eric, the Bloomberg ETF specialist analyst, also weighed in his essentially opinion. He said, referencing the quarterly public disclosures required with large US investment managers, with that, every institution type is now represented in the Bitcoin ETFs, which is true. He said endowment banks are in Bitcoin ETFs, HFs on Bitcoin ETFs, family offices on Bitcoin ETFs, advisors, Bitcoin ETFs, pensions are in Bitcoin ETFs. Holdings essentially on Bitcoin ETFs, VC essentially companies, venture capitalists are also on Bitcoin ETFs, brokerage also in Bitcoin ETFs. Eric is essentially stating that every sector in the traditional market space right now is investing in the Bitcoin ETFs. Even education, essentially a university or a college being the first one inside the United States to invest in the Bitcoin ETFs. 2.7 million shares they brought of Bitcoin ETFs, Grayscale's Bitcoin mini trust, which is about $15.1 million this university spent. Since January, the emergence of Bitcoin ETFs has played a critical role in establishing Bitcoin as a genuine asset class. This breakthrough has sparked considerable essentially interest among institutional investors, as seen by recent filings from additional organizations. For example, the state of Michigan's retirement system reported a holding in ARC21 shares, spot Bitcoin ETFs worth approximately $6.6 million, demonstrating that even larger essentially entities are considering cryptocurrency investments. In 2024, cryptocurrency funds substantially impacted the ETF industry, accounting for 13 of the top 25 ETF launches by inflows through August. In particular, Bitcoin has dominated the markets with 6 of the top 10 successful ETF launches this year. And furthermore, numerous essentially Ether ETFs established in July have generated more than $1 billion in net inflows. The success of Bitcoin ETF market space has spurred essentially issuers to consider ETFs for other cryptocurrencies, such as Solana and XRP, which is possibly going to be next. But XRP obviously has essentially a better chance of becoming an ETF because they've already applied for a trust line. 2 companies are Bitwise and Canary. Now, moving off, essentially, the first ever university college to invest in the Bitcoin ETFs inside the United States, which is a big deal, to BlackRock. Now, a lot of people would have told you a long time ago inside the crypto space that institutions, everybody except me, a while ago, let's just say, even a long time ago, before January 2024, everybody inside the crypto space would have told you that institutions would not be buying $40,000 Bitcoins, $50,000 Bitcoins, $60,000 Bitcoins, and so on, is what everybody would have told you inside the crypto space. All the influencers would have lined up together, and essentially majority of them, like parrots, will be repeating each other's words, which is, no institution is going to buy $40,000, $50,000, $60,000 Bitcoins. They want $20,000, $15,000 Bitcoins. And I said, that's ridiculous. BlackRock increases its Bitcoin holdings to nearly $27 billion at these prices. BlackRock, the world's largest asset manager, has significantly expanded its holdings in iShares Bitcoin Trust ETF, currently owning 403,725 bitcoins, worth approximately $26.98 billion. $26.98 billion at these prices. According to the company's reports data, BlackRock's Bitcoin portfolio is experiencing rapid growth and is no slowing down. According to the blockchain analysis firm Look On Chain, BlackRock acquired an additional 34,085 Bitcoins in the last 2 weeks, increasing its portfolio by $2.3 billion. These substantial purchases demonstrated the confidence of BlackRock's clients in Bitcoin. Asset managers like BlackRock hold assets on behalf of their clients. The iShares Bitcoin Trust ETF IBIT, which became operational on January 5th, has provided a 44.80% return as of September 30th. Managing over $10 trillion in assets, BlackRock has indicated that Bitcoin could serve as a hedge against the raising US debts, essentially scenarios that's going on, and other microeconomic concerns as well. The adoption of pro-Bitcoin stance by such a large company marks a significant milestone inside the financial landscape. Bitcoin can behave differently than many traditional investment vehicles. As the global investment community navigates increasing geopolitical tensions, Bitcoin may serve as a unique portfolio diversifier against financial, monetary, and geopolitical risks, says on the BlackRock report. Currently, Bitcoin's price hovers around $69,735. This substantial investment from BlackRock's clients sends essentially significant signals to other market participants. The interest of major investors like BlackRock and Bitcoin suggests that cryptocurrencies may take on more prominent roles in the financial portfolios in the future. Additionally, the potential of Bitcoin as a hedge against economic uncertainties offers an attractive option for investors. And in conclusion, the growth of BlackRock's Bitcoin reserves indicates that digital assets may play a crucial role or essential role in the corporate investment strategies. Investors continue to monitor Bitcoin's performance and cryptocurrencies' performance in relations with macroeconomic factors closely. So, even at these prices, right, some people might be panic selling in some sort of scenarios and so on. They're still buying huge amounts. This is not good just for Bitcoin. This is good in general for the crypto space. It just brings more eyes on the crypto space, but also, it's the potential for more ETFs to be happening possibly around the corner. Let's just say, for example, Gary Gensler gets fired. Maybe soon. Now, moving off BlackRock's report to, ironically, Gary Gensler. So, SEC, Gary Gensler, Congress. Congress is stuck. Congress doesn't know what to essentially pass in terms of policies and regulations when it comes to crypto assets, but they want to pass some regulations. Congress wants to pass staking regulations. Congress wants to pass buying crypto assets regulations. Congress wants to pass holding essentially crypto assets. And Congress wants to also pass essentially the idea of mining crypto assets. So all essentially areas you can see inside the crypto space: trading, buying, selling, holding, mining crypto assets, all the sectors. Congress wants to pass some regulations into it. So here it is. US crypto regulations. And this is essentially a long discussion that Congress had. We're going to go for the bullet points. There's quite a lot of bullet points, but it's the discussion that Congress just had. US crypto regulations need a hard fork. These simplified modifications to the SEC's current regulatory framework for crypto asset issuance, staking, custody, and trading can foster greater innovation without relying on new acts of Congress, says essentially Mike. At the heart of every blockchain network is a consensus mechanism or a system of rules designed to align participants in updating the network state. From time to time, participants must opt into modification to these rules, known as hard fork, or else remain a legacy version of the network. With a change in administration forthcoming, the Securities and Exchange Commission, SEC, has an opportunity to institute a hard fork of its own with respect to its approach to crypto regulations. Although legislation is necessary to establish a fulsome legal framework for crypto assets, the SEC can also abandon its regulation by enforcement playbook in favor of pro-innovation regulatory frameworks that scales to accommodate novel markets. So apparently Congress is saying that Gary Gensler can maybe last minute change his playbook. It is possible for Gary Gensler to change his playbook, but I don't think there's any trust left in Gary Gensler. But Congress believes there might be some trust if Gary Gensler decides to change his playbook of how he goes after crypto assets. Instead of going after them, regulates them. Every offer or sale of a security must be registered with the SEC. Absence and exemption. These essentially raise two problems for crypto asset issuers. First, it is unclear whether any crypto asset is a security. And second, the current registration process issuer specifies exemptions on numerous, essentially incompatible with the characteristics of many crypto asset offerings. The term security is defined to include, among other things, any stock, note, bond, or investment contract. And federal courts have consistently held that crypto assets in hand and of themselves are not securities. But many sold as the objective of an investment contract are securities. Of course, instruments such as common stocks and warrants are securities, whether issued in tokenized form or not. But the most widely traded, essentially crypto asset, more closely resembles currencies, trading cards, and other essentially commodities that ordinarily fall outside of the security definition. Issuers of crypto assets have addressed that the risk of essentially violating the registration requirements by relying on various registration exemptions when engaging in offerings of crypto assets that may constitute investment contracts. However, the SEC has sued many such issuers for alleged violations of registration requirements under the theory that crypto assets sold as an objective of an investment contract inherit the investment contract's security status. There is no legal precedent to support this viral theory of security status, which would make many ordinary commodities sold in the stream of commerce into securities. A new administration can eliminate this regulatory friction for issuers by clarifying that crypto assets sold as the objective of an investment contract that do not independently qualify as a security are not subject to registration requirements. Issuers of crypto assets that do meet the definition of a security today face the false choice of filing essentially a registration statement or relying upon an exemption from the registration. Although the SEC chairman Gary Gensler has said that such issuance need essentially and only fill out a form on their website, the registration process is designed for massive companies under centralized management seeking to go public rather than teams of software developers intending to exit a decentralized community space. The SEC should evaluate whether reforms of the registration process are necessary and appropriate to accommodate crypto and asset issuers, as it's done in the past for asset-backed security issuers. Now, the SEC does offer some sort of a service for anybody to, as a crypto company, to go and register with them on their website. But what happens next is you get sued instead of getting regulated. And Congress is aware of this. And essentially, they're saying this needs to change. Additionally, the SEC has broad authority to exempt certain activities, products, and transactions from the registration requirement, if necessary or appropriate in the public interest. It should use the authority to propose additional registrations, sorry about that. Additionally, the SEC has broad authority to exempt certain activities, products, and transactions from the registration requirements, if necessary or appropriate in the public interest. It should use the essential authority of proposed additional registration exemptions for crypto-native methods of distributions, such as offerings or technological sophisticated protocols users, validators, operators, play-to-earn gamers, and testnet participants. Which means the SEC needs to come up with regulations for all these categories inside the crypto space, which they haven't done yet. Finally, the SEC should propose a safe harbor from the registration requirements of essentially airdrops. It is well understood that distribution of a security is not a sale if the receptor of the security does not individually bargain to contribute cash or other tangible or essentially considerations to the distributor's exchange for their security. However, the SEC has nonetheless categorized airdrops inside the crypto space as subjects to registration requirements. The SEC should essentially certify certain conditions that airdrops can satisfy to be safe harbored from constitutional sales. The SEC wants to know whenever you receive an airdrop in the most simplest form. Users of essentially proof-of-stake blockchain networks can commit their crypto assets as stake to help secure the network and earn rewards in accordance with this consensus mechanism. Many such users choose to do so by retaining a staking as a service provider or using a liquid staking protocol. However, the SEC maintains that these staking arrangements constitute investment contract securities subject to registration. While many of these staking offerings arguably constitute technical services rather than investment contracts, the SEC should establish a registration exemption for others and sales of any staking services that constitute as securities to the assurance that users of proof-of-stake blockchains are able to access these vital services. The SEC's plan of regulating the crypto space is knowing every single footstep you take inside the crypto space. As the retail person, not only does the SEC want to know every single footstep the institutions take inside the crypto space, or the blockchain firms, but they want to know every single step you take. Are you staking your crypto assets? The SEC wants to know if you're staking your crypto assets. The SEC wants to know if you're airdropped essentially any sort of crypto asset. The SEC wants to know everything about you if you're inside the crypto space. The diversity essentially of participants in the crypto markets requires a broad range of custodial solutions. Crypto hobbyists tend to prefer the use of non-custodial digital wallet softwares to retain a custodial, essentially digital wallet provider. However, the SEC has made it challenging for industry participants to access both types of custodial solutions. The agency has brought lawsuits against developers of such most popular non-custodial essentially software products, asserting that these developers are brokering transactions as securities. Additionally, the SEC issued essentially a staff accountant bulletin that effectively requires public companies offering crypto assets custody services to report their custody of crypto assets as liabilities on their balance sheets. The SEC also wanted banks to put crypto assets as liabilities on their balance sheets, which all the banks refused to do so. As a result, many custodial banks have opted not to offer crypto assets custodial services because they will be subject to adherence regulatory capital treatments with respect to these assets. It's interesting that the SEC isn't liked by the crypto space or the banking space. At the same time, the SEC has prohibited broker dealings from offerings of custodial services for crypto assets unless they qualify as a special purpose broker deal and forego offerings of custodial services for traditional securities and non-security crypto assets. Furthermore, the SEC has essentially opinioned in recent proposed rulemakings that registered investments adverse must always custody client crypto assets with a qualified custodian because such assets constitute funds or securities under the agency's custody rule. And the SEC can immediately remove these barriers for crypto custodial solutions for withdrawing the staff accounting bulletins, its lawsuits against the non-custodial digital wallet software providers, and its special purpose broker deal restrictions. And moreover, the agency can also propose new amendments to custody rules to clarify which, if any, crypto assets qualify as funds and establish reasonable executions from the qualified custody requirements such as for staking and exchange tradings. Basically, the Congress is essentially laying out all the things the SEC is capable of doing, but isn't. It's not doing any of them. Instead, it's just suing them. Operators and developers of crypto assets trading venues face three core challenges. First, it is unclear whether crypto assets initially sold as an objective of an investment contract are themselves securities that can only be listed for trading on the SEC's registered platforms. Second, the registration requirements for securities exchanges are incompatible with the way that centralized and decentralized crypto essentially trading venues currently operate. Third, the SEC's registered exchange can only list registered securities, but most crypto assets in circulation today were never registered with the SEC. And despite these frictions, the SEC has failed to offer industry guidance and instead brought lawsuits against multiple crypto assets, trading venues providers, or for registration violations. And additionally, people who purchase and sell crypto assets in secondary markets must navigate a legal minefield. Well, federal essentially security laws include a general exemption from the registration requirements for others and sales of securities by a person other than the issuer. Underwriters or dealers of the SEC asserted that many purchasers of crypto assets are underwriters and dealers. And the SEC can immediately withdraw their lawsuits against crypto asset trading venue providers, which are essentially driven by an anti-innovation policy agenda rather than an investor protection mandate. Instead, the agency should propose modifications to its exchange registration requirements to accommodate crypto trading venues, including reasonable exemptions to the restrictions on listing of unregistered securities. And the SEC should also evaluate the merits of deeming crypto asset securities that satisfy conditions to be exempt securities that are excused from certain secondary trading essentially restrictions. And it should also withdraw its recently proposed amendments to the exchange's definition and recently finalized amendments to the dealer definition, each of essentially which is prejudice against crypto software protocols. Further, the agency should also clarify the application of Rule 144, safe harbor from underwriter status to crypto assets purchased as a part of investment contract. Now, that is essentially what the SEC and Congress had a conversation about. Of Gary Gensler should essentially be introducing all sets of regulations, and Gary Gensler had years. Genuinely, Gary Gensler had years to come up with any sort of policies on staking, on stable coins, on essentially holding crypto assets, buying crypto assets, trading in general, futures market space, staking when it comes to crypto assets. Gary Gensler had years to come up, and he didn't. Somehow, Congress thinks that maybe Gary can have a hope if he changes his rulebook and comes up with all the policies then and there. Also, the SEC has technically, you can say, its own crypto exchange, which a lot of people are not aware of. There's a crypto exchange that essentially has 90% of their employees, 90%, 99% of their employees are all former SEC members. There's an exchange, Prometheus. And it's the only crypto exchange that's got a full license to operate from the SEC. This is what Congress was referring to, essentially in a way that Gary Gensler or the SEC has a crypto exchange. That's they have an operational crypto exchange that is fully licensed by them, and it's all former SEC members. But here's the thing: that particular crypto exchange that Gary Gensler set up, maybe for his retirement to make a profit, is only going to be accepting crypto assets that agree to be securities, for them to be listed on the SEC crypto exchange, you could say. And that Congress wants essentially Gary Gensler to change the policies of that Prometheus crypto exchange and to list any crypto assets, not just securities. In other words, Gary Gensler is trying to manipulate crypto assets to become securities so they can get listed on the only crypto exchange in the United States that has a green light and a full license, which is ironically all of them are former SEC members, all the employees. So is Gary Gensler manipulating the market in his favor, forcing crypto assets to become securities on purpose so he can list them on his crypto exchange, the only one he's ever green-lighted in his lifetime? But there's a catch. You have to be a security. Well, we'll find out very soon, but Gary Gensler is going to be jobless very soon as well, to be fairly honest, which is great news. Now, moving away essentially from what Congress has said regarding Gary Gensler and the SEC, that maybe there's a hope somewhere there that Gary Gensler can change his playbook. I'm very doubtful. The only way that the SEC can regulate the crypto space is by getting rid of Gary Gensler. It's the only way to regulate the crypto space. Get rid of Gary Gensler. And there's one man that can do it. His name is Trump. The other person named Kamala, or some people call her Skamala, she's not going to be getting rid of Gary Gensler, and Gary Gensler is going to be the head of the SEC for 2026. Essentially knowing Kamala Harris, she is pretty useless in every position. Now, moving off what Congress said regarding Gary Gensler, one particular country in the Latin American countries that's decided to use Bitcoin as a legal tender as well. They're going to be following the footsteps of El Salvador. By the way, before I go through this next news, this is a live as well. So if you do have any questions, don't be shy. Put them down inside the comment section. I read everybody's questions one by one. I read out your name and then I read out your question and give a response as well. So if you are even new inside the crypto space, don't be shy. I read everybody's comments one by one. So before we go for the next news, which is another country greenlighting essentially Bitcoin or crypto assets as a legal tender inside of Latin American countries, let's go inside the conversation first. Let's see what's going on in there. Camel says, what in I don't get is that everyone is saying if Kamala wins, market will tank, but everything will get scooped up by the market, smart investors. So I don't understand why people are saying I'm selling. I'll be honest. If she wins, I'll be honest. Don't know. Kamala Harris is the devil, is what Ladis said. Ladis, why is now XRP Ledger used for memes? Why is the XRP Ledger now used for memes? Is Ladis's question. Look, the XRP Ledger is not technically supposed to be used for memes, but the meme group has decided to use the XRP Ledger to create memes. Here's the thing. The retail section wants to pump the XRP Ledger by building meme coins on it, which is the most dumbest thing I've ever heard in my life. But if anybody out there wants to build an XRP Ledger by bringing meme coins, sure, why not? I mean, meme coins are the fastest way, genuinely, proven millions of times. Meme coins are the fastest way a retail section member can lose their money. It's the fastest way. Not saying all meme coins are possible scams. There are one or two out there, but about 99.9% of them is the fastest way for any person inside the retail section to lose their money. Wouldn't it be simple? That's just factual. It's not an opinion, pretty much factual. And wouldn't surprise me if MIT and Harvard and Penn State, etc., have invested as well. But they have not said anything. Yeah, well, when it comes to their filings, so how we found out about this university that's essentially gone into Bitcoin ETFs and invested $15.6 million worth of into Bitcoin ETFs through the Grayscale Bitcoin Trust. The only reason we found out is because they filed in with the SEC, which they had to. But if those universities also operate as well, they most likely will file in very soon. You said that in G20 they want to come out with a guideline with all the countries. This is the best way for less confusion by everyone following the same rules. Yes, I did, and that's exactly what's happened in G20 summit that happened in New Delhi last year. Yo, Miles Knox, good to see you. So how you doing? How you been? Now, Bitcoin as a legal tender and cryptocurrencies as well in another country, in Latin America. So Bitcoin as a legal tender in the country of Suriname. Presidential candidate makes a bold BTC promise and cryptocurrency promise as well. Suriname's presidential candidate Maya has essentially revealed her bold vision for transforming Suriname's economy. She pledged that if elected, she would make Bitcoin a legal tender on her first day in office. You can say she's using the Trump playbook, which is make crypto assets some sort of a legal tender, bring some regulations, bring some policies. She's playing the same rule, which is great to see as presidential candidates doing this. An entrepreneur and longtime Bitcoin advocate, essentially Maya, believes that crypto can address some of her country's most pressing economic challenges. These include high inflation, systematic government corruption, and severely limited financial infrastructure. So in her Latin American country, she wants to essentially greenlight, if she becomes president of her country, she wants to greenlight Bitcoin as a legal tender and eventually all crypto assets as some sort of legal tender. In a recent interview, Maya conveyed her deep frustration with the Surinamese current administration, which she claims has only worsened existing corruptions and mismanagement. This government is worse than last, she remarked. Maya also pointed out to be essentially the public service, including healthcare, as evidence. She said that people are tired in my country and we really need drastic change, similar to El Salvador, she said. She added, referencing the country's landmark decision to adapt Bitcoin as a legal tender in 2021. And inspired by this move, Maya envisions BTC as the core of Surinamese economy, as it will provide a pathway to financial sovereignty, transparency, and resilience. Bitcoin should be a de facto currency separating money from the state completely, she stated. Moreover, her plan goes beyond just legalizing Bitcoin. She's also dedicated to establishing a system that protects Sumerian citizens from both local and international pressures. Furthermore, Maya aims to make Sumerians financials independent from traditional financial institutions, particularly the International Monetary Fund. Now, she's not the only country that's trying to go against the International Monetary Fund. Russia essentially decided to also go after the International Monetary Fund, which is odd to see. Russia wants to create their own version of the International Monetary Fund for the BRICS countries. They don't want to create their own version of the Bank of International Settlements because that's what's supporting their centralized bank and all these CBDC adventures. But they want to create their own International Monetary Fund. And, there's a lot of countries slowly turning against the International Monetary Fund. She even criticized the International Monetary Fund as an instrument of monetary colonialism, which it is, that hinders true economic progress in smaller nations, which it does. Recently, the International Monetary Fund also tried to create a hurdle in El Salvador, asking them to limit their use of Bitcoin, which is facts. The International Monetary Fund does technically go around and essentially bully little countries. It's factual. See, everybody borrows money. Every country borrows money from another country. And the International Monetary Fund is typically the organization would go around and ask for that money back to pay off their debts. Now, they did this with essentially El Salvador, where the International Monetary Fund went to El Salvador and said, look, you would have to pay this amount of debts back, but maybe we can do you some sort of a discount and, buy you some time if you limit the use of Bitcoin in El Salvador, which El Salvador's president responded with, hell no. So it's not the first time the International Monetary Fund has went around bullying little countries. It's been many times, and El Salvador is just one example. Thus, with the use of Bitcoin as its decentralized structures, she hopes to build an economic status free from external interference. Additionally, Maya also shared her intent to create a sovereign wealth fund powered by Liquid Network to support universal basic income. But this is where it gets a little bit interesting. See, Maya's not full cryptocurrencies Bitcoin all the way. She's also a bit CBDC all the way. So for her to be creating a universal basic income, a UBI, a universal basic income is slowly going to become a CBDC platform for every country. Every country right now that's thinking about offering universal basic incomes or has already started offering universal basic income, that's the easiest way to get everybody into CBDCs. Now, because a lot more people are going to be losing their jobs eventually due to AI, a lot more people are going to be landing on universal basic income, which is going to be a CBDC platform eventually, and reduce dependency on income taxes, which is not the full reason. If we decentralize the flow of royalties and income, we reduce the government control over resources, benefiting the people directly. When any government member ever or any politician says this is for your convenience, they're lying through their teeth to you directly. Whenever any politician says this is for your convenience, it's basically saying this is a new way for us to be able to manipulate and control you without you knowing it, but it's for your convenience. This initiative aligns with her transparency's driven vision for an economy where citizens enjoy financial freedom without relying on central bank policies. To balance these sweeping changes, Maya has essentially detailed plans to attract foreign investors and digital nomads who can help energize Sumerians' economy without disrupting their local cultures. She emphasized her intent to avoid gentrifications and over essentially illicit activities while promoting sustainable development initiatives of Bitcoin's infrastructure at its core. Her vision includes developing local talent in technology sectors while keeping the wealth generated with Sumerians. And while Sumerians essentially is working on a Bitcoin strategy similar to El Salvador, recent reports suggest that only 7.5% of El Salvadorians use Bitcoin for transactions. Thus, Bitcoin serves more as a reserve asset against such an inflation hedge than anything else, which is facts. I've always said this, and I will always say this: Bitcoin is not supposed to be used as a purpose of essentially transactions. Bitcoin is not the asset to be using for transactions. If you want to hedge against some sort of scenarios, Bitcoin would be a great asset for that if it does its job in some scenarios. For example, whenever there is a war, any sort of geopolitical tensions, Bitcoin doesn't rise in value, it slightly plummets in value, whereas gold will rise in value in geopolitical tensions. It's been proven many times. But in other scenarios, Bitcoin does its job. But I've said this many times and I'll say it again, Bitcoin is not supposed to be used for transactions. It's technically a reserve asset, full stop. It's not a bad thing either. A lot of people want to make Bitcoin into transaction possible. A lot of people want to build on the Bitcoin network and bring NFTs and bring some other services to Bitcoin chain, and it's all failed back to back, one by one. Even Binance dropped one of their core Bitcoin NFT projects because they said it's slowing down the Bitcoin network, and the project makes no sense. So they dropped their Bitcoin NFT situation. But yeah, and I'm not the only one. There was a billionaire hedge fund that went on Wall Street, basically went on Bloomberg and did an interview, and he said, well, you don't sell off a bit of real estate to buy a cup of coffee, which is basically what Bitcoin is. So it's a reserve asset, not a currency. And it's incredibly slow for a currency as well, if it ever was. But that's when it comes to every crypto purpose. That's a genuine crypto asset, has a different purpose. So Bitcoin, reserve asset, not transactions. XRP, transactions, without a doubt. It was built purposely for that. Solana, meme coins. It's the only thing Solana was ever built for. With summaries, essentially is working. A startup advocates for decentralized, and Maya also ultimately aims to limit government powers and summaries as well. She's even hoping to make herself and possibly the role of president of no use. I don't want power. I want to ensure that I don't have to be in charge as soon as possible. It's the most weirdest speech a president campaign can make. Her coming on stage is essentially saying, I don't want to be president, I don't want to have power, but I want to fix my country and just, sidestep. But she wants to introduce CBDCs in the simplest form. But she also wants to be, creating a legal tender country for herself for crypto assets, which is amazing to see another country in Latin America becoming a pro-crypto country. More and more countries are turning towards pro-crypto, which is amazing to see. But also more and more countries are turning towards CBDCs, which brings us to our next news, which is the Bank of England regarding CBDCs and digital IDs. Before we go through that, let's go inside the comment section first. Let's see what's going on. By the way, this is a live, which means if you do have any questions, go for it inside the comment section. I read everybody's questions one by one and give you an answer. Yo, Miles, how you doing? Nox, good disease. What are you doing? So you said HBro is a good project. Now I open a 500x on HBro. Why would you open up a 500x on leverage on HBro? Greetings, how you doing, mate? Bank of England. Bank of England explores a digital pound to compete with fintech firms. The Bank of England has came out with another report today regarding CBDC issues. The Bank of England has essentially said that if we don't move forward with CBDCs, then we're going to be losing our foot inside the financial market space. So, the Bank of England is moving forward with research on a possible virtual pound as tech companies gain ground in financial services. Governor Andrew Bailey expressed concerns over traditional banks essentially falling behind in digital innovations, which could leave them vulnerable to tech competitors. Bailey stressed the need for banks to maintain privacy and safety standards and warned that everyday financial transactions could shift towards unregulated tech firms if banks do not inherit, essentially, or innovate, essentially. Although the bank has not made an immediate decision, Andrew Bailey emphasized that a central digital currency from the Bank of England might become essentially a necessary item, which I said a long time ago anyways. Every single centralized bank is going to be coming off a CBDC. And for the longest time, every centralized bank will come up with a study report and say, we're not sure if we're going to go ahead with CBDCs, but we're going to be spending $10 million more or $50 million more on developments and research. You don't develop something and spend millions of dollars onto to drop it at the end. It's not a concept vehicle. It's a payment system. And the Bank of England has come to the conclusion, ironically, to launch their CBDC whenever it is ready. Something I said a while ago is going to be happening because, the Bank of England, just like any centralized bank, will keep on coming out with reports. We're not sure if we're going to, launch a CBDC, but yet we're going to spend £10 million more developing it. If you use basic common sense, nobody spends $10 million just to throw away. Bailey also pointed out that the commercial banks are not advancing digital payment solutions quickly enough. And British banks are currently offer essentially a rapid and non-cost digital transactions. Yet further advancements in automated payments and digital features remain limited. He suggested that traditional banks may be prioritizing profits from existing systems over their need to modernize, which is facts. Remember when I said to everybody, one of the biggest things that the banks will be losing out on a digital world is making a profit from you. So the simplest way of how a bank works is you put money into a bank, the bank would use that money to trade on or lend it out to somebody else and make money on top. Now in a CBDC world where your CBDCs are held in your crypto wallets, the bank is not going to be using your CBDC assets to trade inside the market space and make a quick buck on top or lend it to somebody else. So based on those conclusions, the Bank of England basically said in a simplest way, something that I said a while ago, that the reason why some banks were hesitant to move to a new financial system is because they're going to be losing out on their old style profits, which is making money from your money. They can't do that in CBDC world. So additionally, Bailey stated that banks reluctant may hinder competition because profitable payment systems deter innovation as a result. And Bailey essentially highlighted, the governor of the Bank of England highlighted that a lack of sufficient progress could lead the bank to introduce a digital currency. He raised the question of whether traditional banks are adapting quickly enough to meet digital demands, or if fintech firms will take the lead alongside tech competition, broader economic conditions, or influencing essentially the bank's digital currency exploration. Failing consumer essentially spendings and raising unemployment could also increase financial pressure. Simplest way, the Bank of England has basically came out with a report and saying, we're not the only ones that's moving a bit slow. We need to move faster. There's a lot of other commercial banks around us that are also moving slow, mainly because they want to stick to their old profit makings. But the Bank of England said, if we all stick to our old profit makings, then we're going to be falling out of the digital financial system that's happening around the world, every other bank. So, which means we need to get involved. Which also means the Bank of England is not going to be developing their own system out of thin air. They're actually going to be using a digital partner. And who could that maybe be? If you go to the Bank of England's website, it's very simple. If you go to the Bank of England's website, and there's a search bar. On the Bank of England website, there's a search bar. In that search bar, if you type in Ripple, there'll be multiple PDFs on the testings the Bank of England has done on Ripple, on XRP and so on. But the Bank of England, essentially, also another thing I said, banks aren't going to be developing their own blockchains out of thin air when they're already existing and develop on it. Yeah, they're going to be using it. Now, moving off the Bank of England, thinking they're falling behind, which they are, and that they have no choice but to adapt ASAP, which they have genuinely no choice but to adapt ASAP. To one crypto project that I said a while ago for everybody to look into if you still haven't. And that crypto project was ACH. Because an ACH is very underrated. They have multiple licensings, multiple partnerships, contracts, developments going on. And ACH, Pay, has just announced a blockchain launch. Leading altcoin project, Pay, has announced its plans to launch a layer 1 blockchain named Chain. This development will allow users to pay gas fees with either fiat or their native token ACH, which is amazing because having their own chain, which means that you no longer have to use ETH to move it around as gas fees. On their own chain, ACH is the gas token, just like, for example, XRP is the gas token for XRP Ledger. It's basically what's going to be happening with ACH. The announcement spurred a rapid increase in ACH's price, signaling strong market interest because they're going to be having their own chain, no longer operating on essentially multiple chains, but their own chain. Pay, a crypto payment provider, has revealed its plans to introduce Chain, a layer 1 blockchain aimed at essentially meeting the growing commercial needs of its operations. Also, It has a bridge to Solana built on Solana's virtual machine SVM architecture. LMHP Pay will facilitate seamless integrations between off-chain storage and on-chain transactions. The goal of the project is to establish a system where fiat and cryptocurrencies coexist, reinforcing LMHP Pay's commitment to bridging traditional and digital finance. Designed for large-scale commercial applications, LMHP Pay will offer a scalable infrastructure, enabling smooth interactions between on-chain operations and off-chain storage. With its architecture, the platform will promise flexibility and reliability, ensuring quick and efficient transactions processing. LMHP Pay's user base continues to expand. ACH will serve as the utility token for LMHP Pay, for LMHP Chain, allowing users to cover gas fees and providing a stablecoin revenue mechanism for easy income generations. The announcement of LMHP Chain and essentially ACH's role as the gas payment option finally fueled a sharp increase in ACH's price. The token surged about 5% in value when the news was announced. Trading volume has also shown a notable 116% essentially increase, reflecting heightened interest among investors and traders. And LMHP Pay also, about a week ago, I made the announcement as well. They integrated with the Samsung Pay as well, and they're updating their virtual card service. This integration allows crypto holders to spend digital assets directly through Samsung Pay, one of the Samsung's electronics popular payment and digital wallet services. A representative from LMHP Pay indicated that this partnership is expected to drive demand from indirect users who can now have access to LMHP Pay services through Samsung's vast user base. And the latest development suggests a strong growth trajectory for LMHP Pay, backed by innovative blockchain solutions and strategic partnerships. So essentially, the guess that's coming around is that LMHP Pay launching their own chain, which means their token can finally be used as a gas token. Because whenever you wanted to move ACH, you had to have some sort of ETH to cover the gas fees. Not anymore. If it's on the chain. Because their own token will now play the gas token. But they're essentially guessing that partnering with Samsung was the move that made LMHP Pay create their own chain. So they become, a one-man show instead of using ETH as their backbone, which is great. Honestly, amazing news for LMHP Pay, without a doubt. Now, moving off that news to Hong Kong Monetary Authority. The Hong Kong Monetary Authority project resembles partners with Brazil, Thailand for tokenization. Hong Kong, Brazil, and Thailand are coming together for testings of tokenizations. Before we go through that news, let's go inside the comment section. Once again, this is on live as well, which means if you have any questions, go through inside the comment section. Don't be shy. Write down any questions. Let's see what we got. Do you think global regulations will come by mid-2025? Yes. Global regulation. We've had quite a bit of regulations this year, but not from the US so far. But global regulations, yes. Mid-2025 makes a lot of sense because Q1 will probably be them going back and forward on regulations and policies, and mid-Q3, Q2, Q3 is when we're going to be seeing global regulations coming through. Because 2025, we're going to have a lot of CBDC releases, and we're going to have CBDC releases. We need to have regulations in place. We're going to have a lot of tokenizations, CBDCs happening, cross-border payments, and all happenings, and so on. Brazil coming out for CBDC, Russia CBDC, China expanding on their CBDC, India expanding on their CBDC, a lot of Latin American countries releasing CBDCs. Yeah, we're going to need regulations and policies in place. So yes, I would say Q3, Q2, Q3, even Q4, we're going to have global regulations coming in. Good morning, Miles and CMF. Good to see you as well. Ghost Bonner, how you doing? How you been? Do you think ACH will give a higher ROI than XLM? No. ACH is an amazing crypto project, no doubt about it. An amazing crypto project, incredible partnerships, massive list of licensings to their name. But XLM is still a brilliant project as well. And either way to go. I mean, look, I would say XLM above ACH, but ACH is an incredible project. Incredible project, ACH, but XLM above ACH. But still an incredible project, no doubt about it. You'll help me. If 2.5 trillion USD come under the XRP ledger, does that make the market cap of XRP 2.5? No, because it depends on how it comes to the ledger. Depends. If it's coming in to the XRP ledger of buying purchase, then sure. If it's coming on the XRP ledger because of tokenization purposes, then it's going to be indirect, adding value to the XRP. Now, indirect value. It would have indirect value. But it also depends on how that money comes in. Hong Kong Monetary Authority. Because it's not as simple to answer. You have to tell me how it's going to come into the network. Hong Kong Monetary Authority. Brazil, Thailand for tokenization. The Hong Kong Monetary Authority has been networking its tokenization-focused project and has essentially new collaborations to show for it. The project, essentially, Example, is being linked with the Central Bank of Brazil, DREX pilot project, and the Bank of Thailand's BOT project, Project SAN, and the CBB announced the second phase of its DREX central bank digital currency, CBDC. A lot of people think that tokenization is only going to be for cryptocurrencies. For example, tokenization on Ethereum, tokenization on Solana, tokenization on Base Network or Chainlink, and so on. You're mistaken. The biggest play tokenization is going to be having is actually on CBDCs. Let me simplify it. Wholesale CBDC tokenization, okay? Wholesale CBDC tokenization is going to be massive, absolutely massive. So don't assume tokenization is only for the crypto space with, Solana tokenization projects and Ethereum tokenization projects and OP tokenization projects or Chainlink tokenization. No. CBDCs is where the tokenization play is happening. Why is that happening? Because the Bank of International Settlements. The Bank of International Settlements is the one that's been doing testings for a very long time on tokenizations in CBDCs. Brazil is going to be the first country to bring that essentially to reality, tokenization on CBDCs. The Central Bank of Brazil, DREX pilot project, and the Bank of Thailand is actually Project SAN. The CBB announced the second phase of its DREX Central Bank Digital Currency CBDC pilot program and began essentially accepting applications for it in mid-October. Tokenization is essentially on the agenda for further DREX testings. Brazil CBDC right now is going through incredible testings for CBDCs. Cross-border payments versus payments, PVP, and delivery versus payments, DVP, trade, finance, and carbon credit settlements use cases will be tested between Hong Kong and Brazil. The Hong Kong Essential Monetary Authority noted that DREX project has more than 70% participants at this time. The Hong Kong Monetary Authority will also test PVP and PVP settlements with BOT. PVP is essentially a method for monetary transaction settlements, and DVP is a settlement method for securities. The trade payments and carbon credits will also be a focus of the collaboration with the BOT, with the goal essentially of developing a proof of concept. According to the Hong Kong Monetary Authority, the BOT launched Project SAN in June. BOT Deputy Governor of Corporate Developments, Arisha, essentially also said this partnership will significantly advance tokenization efforts by offering broader insights into tokenization as different technical designs, business requirements, and regulatory frameworks of each jurisdiction will be taken into account. And the Hong Kong Monetary Authority also launched Project Examples in March to develop wholesale CBDCs to support tokenizations. It converted an architecture committee to consider the infrastructure for the project that includes the Bank of China, the Bank of essentially Hong Kong, Shanghai Banking Corporation, HSBC, Standard Chartered Bank Corporation, and essentially the Ant Digital Technologies and Microsoft Hong Kong as well, are all part of CBDC tokenization. The Hong Kong Monetary Authority onboarded the French Central Bank as well to the project in June and launched a digital sandbox back in August. And in February, prior to the launch Project Resembles, the Hong Kong Monetary Authority also issued guidance for financial institutions to close the gaps in tokenization regulations. The Hong Kong Securities and Futures Commission issued rules for tokenized security offerings in November. So, a lot of banks. Hong Kong Bank, essentially China's bank, Thailand's bank, Brazil's bank, and Microsoft is involved in this. Standard Chartered Bank is involved with this. HSBC Bank is involved with this. They're all involved in one core project, tokenization, CBDCs. Now, moving off, essentially, the tokenization of CBDCs to Tether is what we're going to talk about next. Because Tether has decided to wave the white flag. And by white flag, I mean Tether has decided to surrender to the US government. Before we go through that, let's go to the comment section first. Let's just get on there. Once again, this is a live, which means if you have any questions, put it down in the comment section. I'm more than happy to answer the questions you may have. So if tokenization comes on XRP Ledger, the price of XRP won't go up. It will. Yes, it will go up. That's why I said reference it of how the money is going to be coming on. If it's tokenization, then it's going to add value to XRP. Indirect value, but it's going to add value to XRP. Yes, it will go up. So countries tokenizing on CBDCs will benefit Ripple in the long run, right? Yes, correct. Correct. And M, you're correct as well. Your second comment, because this is why I said, tell me how it's going to be entering into the XRP ledger. Yes, if it's on those bases, yes, it's going to be adding value. Indirect value, which means it's going to add value to XRP. So countries tokenizing on CBDCs will benefit from Ripple as well. Yes, Ripple is the only one working actually and technically on CBDCs and tokenization as well. That's also backing international settlements. Now, Tether. This is what Tether's CEO said. Remember, Tether's CEO was this very, proud person about Tether's movements inside the market space, And this is him now. He said, if the US government wanted to kill us, his words, they can press a button. So, as the crypto colossus Tether comes under renowned scrutiny, the CEO of Tether told CoinDesk in an interview that the company respects international sanctions and works closely with law enforcement, but acknowledged it is ultimately at the mercy of US authorities. He said, if the US wanted to kill us, they can press a button and kill us anywhere, Tether CEO said. And he also went on to say, we are not going to fight the US. And this is Tether's CEO, the same CEO that said, nobody can take us out. We're the #1 stablecoin. Nobody can touch us. Coming from, that's his words. And now this is his words also of, we are not going to fight the US. We're waving the white flag. If they wanted to get rid of us, they can. It's a very different speech coming from Tether's CEO. He also said, we may not be the best in presenting ourselves. So this is you could say the first indications of Tether's maybe fall, you could say. Not maybe, definitely fall. Because him starting his words with, we may not be the best in presenting ourselves. Because they work with countries that are sanctioned, but yet want to operate inside the United States. That's bad for business. But what matters is that we are on board. Essentially, what matters is we onboarded the FBI to Tether's compliance systems, he added. We onboarded the US Secret Service. We have thank you letters from the DOJ. We think we are doing, and the best we can. CoinDesk interview with CEO of Tether at the Plan B conference, hours before the Wall Street published an article alleging that the US Department of Justice, DOJ, is conducting a criminal investigation of Tether for possible violations of sanctions and anti-money laundering laws. And Bitcoin and other cryptocurrencies dipped on the report coming out. Tether's CEO later posted on X he had seen no indications that Tether is under investigations, and Tether called the journal story wildly irresponsible. Also, last week, Tether's CEO the Politico reported on potential conflict of interest of key Tether allies like Howard Lutkin and the CEO of Wall Street bond trading powerhouse Katanar, which is a custodian for most of Tether's $80 billion US Treasury bill holdings. And also, Howard also serves as the head of Republican presidential candidate Donald Trump's transition team. Tether coming into the crosshairs of US authorities could reverberate across the $2 trillion global digital asset market space. The economy is a crucial player in the crypto ecosystem. Its $120 billion market cap USDT, by far the industry's largest stablecoin, serves essentially as a main form of liquidity on trading venues and is increasingly trades and used as a payment vehicle in emerging countries. When asked about the possibility of US authorities holding leverage over Tether through its reserve assets held with US-based Katanar, Tether's CEO said that the company cannot hide it. What's basically happening is essentially a company that Tether holds their treasury bonds with, their US treasury bonds, is now being investigated. Whenever you hold, this is what Tether's CEO said, whenever you hold T-bills, the T-bills are actually ultimately in the Fed account. He said, referring to the Federal Reserve System. The reason why I'm comfortable to be with Qatar is that we respect the OFAC, the Office of Foreign Assets Control, and essentially is an office in the US Treasury Department tasked with enforcing sanctions against countries and individuals, including illicit activities and traffickers. When he was asked about USDT's role in illicit finance, Tether's CEO replied that it's a drop in the ocean compared to what the US dollar has been used for, which is a fair statement. Obviously, fiat has been used much more widely when it comes to crypto assets than USDT, without a doubt. But there's one thing that he didn't mention, which is USDT is essentially handled by Tether, whereas the US dollars is handled by essentially the Federal Reserve, and the Federal Reserve couldn't care less of who's using the US dollars, but they care about Tether because Tether's not under their control. No one is perfect, he said, but look at the fines that the banks paid for helping drug lords. He said, for example, TD Bank this month agreed to pay over $3 billion in fines for failing to properly monitor money laundering by the cartels. And Tether's CEO also said that he is proactive in freezing and blacklisting crypto wallets that the company works with 180 government agencies worldwide. The message that we are giving is very loud and clear. You have to be very, very, very stupid criminal if you want to use USDT or crypto in general, he said. Speaking at the upcoming essentially US elections, potential ramifications for digital assets and regulations for Tether, Tether's CEO said that he's hopeful that whoever wins will understand the potential of crypto and stablecoins. When it comes to stablecoins, I think it's easier for them to see it, he said. The Chinese are selling T-bills and we are buying them now. I think the US government and regulators come to the conclusion that, oh yeah, that's a great thing. Tether's US Treasury holdings ranked the company among the top 20 essentially countries, topping even those in Germany. Asked about Qatar and Howard, their political roles in this player, Tether's CEO said working with him was a part of the Tether's 4-year journey from a $10 billion issuer using small banks to leverage operations that needs an Ivy League custodian for his T-bill holdings. What made the difference was Howard publicly affirming that his firm had done due diligence on Tether and telling everyone that we have their money, he said. We don't expect any political favors from anyone, Tether said. He said that Tether has made significant efforts to advance financial inclusion, and Democrats should understand that the need for financial inclusion better than anyone else. Meanwhile, the company is a big buyer of US debts, which should be essentially compelling to Republicans' interest in preserving the US dollar's homology. What we're building makes sense for both parties, he concluded. I think that either way, US regulations will turn out to be a positive thing, whatever happens. So that is a perspective from Tether's CEO, him waving his white flag, essentially saying, look, if the US wants to take us out, then they can take us out. We're not going to be fighting the US back if they want to take out Tether. And he also said that we have also, made some mistakes, but it might be a drop in the ocean type of scenario compared to the US dollars. And that 108, according to Tether, 180 government agencies working Tether as well, which means 180 government agencies have access to Tether's movements, which means if they wanted to bring the Tether down, they can very easily, actually, which makes Tether a very, very stupid man. Not the other way around. Now, what are we going to be talking about next? Moving off Tether waving a white flag, saying we're not going to fight back if the US comes after us, to India. Because, as we all know, India is very much deeply into CBDCs. And the Bank of India is using XRP in their trials for payments, announced by themselves on a live stage. On a live stage, the Bank of India essentially said, we are using XRP. And India has an operational CBDC, which is expanding. Indian banks trial Ripple's XRP for faster and safer bank transfers. Indian banks are piloting Ripple's XRP ledger to improve bank-to-bank transfers with faster, decentralized technologies. The trials aim to create a more efficient and secure transaction system for the country's financial sector. Ripple's collaboration with major institutions, including Kotak and Miranda Bank, could reshape how banks in India handle money payments. The organization joined with Kotak and Miranda Bank back in 2018 to introduce RippleNet, a network focused on fast and secure international payments. Remember when I said a long time ago, Ripple went around and signed every single bank with RippleNet, and then eventually to push upon them XRP. Because I said essentially, because a lot of people said, what, some people inside the crypto space were saying for the longest time, these companies, why would they, all these banks, they're using RippleNet, they're not going to be using XRPs, RippleNet. And I said, look, if they use XRP, it's a little bit cheaper. Banks care about it a little bit cheaper, so it's a little bit faster. But also I said that essentially they can have access to the DeFi space, something that RippleNet can't offer them, which is DeFi. So Kotak Bank, Miranda Bank, all of these Indian banks that partnered with Ripple back in 2018 started using RippleNet and eventually started using XRP. The organization joined with Kotak and Miranda Bank in 2018 to introduce RippleNet, a network focused on fast and secure international payments. The partnership also brought the crypto trading fund, which lets customers use XRP tokens for transactions or convert them into traditional currencies. Due to the limited availability of the testing that's going on, Ripple's network is expanding across India, with banks like Axis Bank, Yes Bank, and many other banks in India. These institutions are also exploring Ripple's on-demand liquidity service, which uses XRP to improve overseas settlements. Ripple's net growth signals Indian banks' strong interest in blockchain to streamline international payments. While the company's technology supports international transactions, Indian banks are advancing the digital rupee project, which is led by the Reserve Bank of India, and several banks have joined the pilot programs as well. So the central bank is involved, and several other banks, Ripple, XRP. And enabling digital wallets for direct transactions in the digital rupees. This project aims to establish a more accessible digital currency system for the country. RippleNet's blockchain technology does not directly support the digital rupees, but instead focuses on international payments. This allows Indian banks to address both domestic and cross-border needs. By keeping XRP separate from the digital rupees, RippleNet can support India's global payment needs, while the bank works on national digital currencies, which is XRP Ledger and XRP. Ripple is building partnerships with central banks worldwide to expand its virtualized currency platform, which offers blockchain-based solutions. However, its US expansion faces challenges due to the ongoing lawsuit, but Gary Gensler is about to become jobless very, very soon, so that's okay. And on the US Securities Exchange Commission. So India coming out there essentially using XRP is massive. India's banks were a part of RippleNet. They were a part of RippleNet back in 2018 when it started doing testings. And India being a part of the Bank of International Settlements, cross-border payments, PDF documentation, Ripple's own documentations. And there are still people out there inside the crypto space who will say, XRP will never be used. I've said this once and I'll say it again a million times. I have to say this pretty much. Just to wake up more people inside the crypto space. That's, if you get left behind, it's on you. Because the signs couldn't be more clear. They genuinely couldn't be more clear. 98% of centralized banks and CBDCs, and people are still wondering who's the chosen project. Not everyone, but a lot of people are still wondering who's the chosen project. A lot of people also still state till this date that nobody's using XRP. Even though central bank governors are coming out on a live video saying we're using XRP. Now, moving away from essentially India announcing they are using XRP for essentially their trial payments that's going on right now for their CBDCs for back and forth for cross-border payments, domestic and international payments, to essentially a news that has some relevance to Ripple as well, with a Bank of International Settlements. The Bank of International Settlements, ironically, the same time India announces this news comes out of the Bank of International Settlements. The Bank of International Settlements advances its cross-border blockchain payment solution. The Bank for International Settlements has progressed its cross-border payments initiative, Project Mandela, a project-based payment solution for cross-border transactions, to the proof concept stage. According to a statement that came out essentially today by the institution, during this proof of concept phase, all participant institutions, including commercial banks, central banks, and other regulated financial entities, all a part of the Bank of International Settlements, will operate essentially on the Mandela node within their systems. Notably, the Bank of International Settlements claimed that the project now includes nodes operated by participant institutions, such as central and commercial banks, for peer-to-peer interactions. The project was developed by the Bank of International Settlements Innovation Hub Singapore Center in collaboration with the central banks of Australia, Korea, Malaysia, and Singapore, with the aim of simplifying compliance in international transactions with safeguarding user privacy. Which company inside the crypto space has beyond amount of licensing in Singapore? Ripple. The project uses zero-knowledge ZK proofs as well as the underlying technology to achieve these privacies. The Bank of International Settlements claimed that the technology enables parties to confirm regulatory adherence without disclosing sensitive transaction details. Using a shared messaging system, the Mandela Protocol will access relative policies for transactions, generate compliance proofs, and manage necessary data for automated regulatory checks. The system essentially operates with distributed repositories of jurisdiction-specific rules and matches these rules against transaction data to verify the compliance. Maha, the head of essentially the Bank of International Settlements Innovation Hub at Singapore Center, expressed optimism of the project, highlighting Mandela's potential to improve transactions efficiency without compromising regulatory rigor or privacy issues. According to the Bank of International Settlements, this compliance by design model aligns with the G20 priorities for enhancing cross-border payments. And then in related news, the BRICS nations officially have launched their long-anticipated cross-border payment systems, BRICS Pays, which came out as well. But Bank of International, the same day, basically, India coming out with the announcements of they're doing trials on XRPs. The same day, the Bank of International Settlements comes out and goes, every single centralized bank, commercial bank, or institutions, a part of the Bank of International Settlements is moving forward with their cross-border payments. It's the same day that India announces XRP trials. Essentially, that's going on with their commercial banks and their central banks back and forward. They actually mentioned the words XRP, the letters XRP. How many millions of Indians has imagined when CBDC is full operating? I mean, India's population is in the billions. India's population is in the billions. So all those people, XRP, being the middleman transaction. But here's the thing. India, Bank of International Settlements. Bank of International Settlements, 63 centralized banks. Which means 63 centralized banks, all those people, domestic and international payments. XRP. Now, I've said this many times, I'll say it again. If you spend 6 years, 5 years, 4 years, 3 years, 2 years inside the crypto space, chasing unicorns and camel tokens and frog tokens and cat tokens, and you weren't choosing the projects that are right in front of you because you were looking for a quick buck, and you get left behind the CBDC, that's completely on you. Don't waste your golden hours, golden minutes, golden seconds inside the crypto space, chasing unicorns. Grow and expand your knowledge on assets that are going to change the world forever as we know it. And one of them, whether you like it or not, is going to be XRP. A lot of people will say it has no future. A lot of people will say it will never be used. But that's just noise. Everybody's entitled to an opinion, but opinion is not correct. And facts are facts. It's been stated many times by Ripple themselves. XRP plays a vital role and is going to be used by Ripple themselves. And it's been essentially on PDF documentations on the Bank of International Settlements and centralized banks all around the world. And now we have a statement also from India as well, stating they're using it for trials. But according to those people on the internet, it's never going to be used. Everybody's entitled to an opinion, but opinion is not correct. Facts are facts. Can you please share the link to the Indian announcement to use XRP? Yes, no problem. Come on, I'll put inside a Telegram group. Also, all good things must come to an end, which they have right now. Which means we've reached the endings of tonight's live show. If you're watching this for the first time ever, this was the CMF Live. This was episode 190. I just want to say thank you so much to everyone from the CMF that tunes in every single episode. We're at episode 190, which is incredible. Episode 190. So thanks so much to everyone from the CMF that tunes in every single night. And if anybody missed it, thank you so much to everyone that's going to rewatch live as well. ACH better than Sui? ACH is, yeah, in a way, yes. It's better in the long term. Sui will be better for short term and long term, but ACH is better long term wise. Take care, Miles, CMF. Ray, see you tomorrow sometime as usual. And it's so great to be back as well. So great to be back. Great to see everyone as well. Love you all. Thanks, Miles. No problem. Scott, see you tomorrow sometime as usual. I will be seeing, this was a CMF live show. This was episode 190. And on this live, I talk about every single night regarding recent news that's happening around inside the crypto space on cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital era. I'll be seeing everybody tomorrow, same timing as usual. Good night, everyone. Thanks, Miles. See you tomorrow, Orphan. See you tomorrow as usual. Thank you, Miles, and enjoy your night all. Let's go. Lena, see you tomorrow sometime as usual as well. Great live. Thanks, brother. Let's go, count. See you tomorrow sometime as usual as well. And just the gist of what we went through on tonight's live, we talked about on tonight's live regarding Bank of International Settlements moving forward for cross-border payments. We talked about on tonight's live regarding essentially Ripple and India on terms of XRP being used for payments. We talked about Tether essentially waving the white flag and surrendering to the United States government. We talked about the Monetary Authority of Hong Kong, Brazil, and Thailand, and China's bank, HSBC, Microsoft, and a few other banks and organizations coming together for CBDCs of tokenization. We talked about ACH launching their own chain on tonight's live as well. We talked about the Bank of England on tonight's live regarding moving forward on CBDCs. We also went through the news topic of Bitcoin being used as a legal tender in another Latin American country. We also talked about Congress talking about the SEC's movements, and maybe the SEC can change their playbooks, but I'm very doubtful. We also talked about on tonight's live regarding BlackRock increasing their wallets to about $27 billion, and went through the news topic of a university for the first time ever entering into the Bitcoin ETF space and acquiring about $15.6 million worth of Bitcoin ETFs from Grayscale's Bitcoin Mini Trust. And we talked about Van Eyck, the managing, essentially, head of Van Eyck, mentioning of what could possibly happen inside the financial market space if Trump wins or if Kamala wins. If Trump wins, market goes up. And if Kamala wins, market goes down. As according to Van Eyck, which it matches any other perspective that's coming out so far on Wall Street. We also talked about FV Bank launching into essentially with Visa, connecting traditional market space with digital market space. We talked about HBAR essentially expanding into Dubai, being the backbone of inheritance. We also talked about Bitpanda going essentially IPO. And we talked about Morgan Stanley's new report that came out today. So those are all the news topics we covered on tonight's live. This was the CMF Live. This was episode 190. Thanks so much to everyone from the CMF that tunes in every single night. And thanks so much to everyone that's going to rewatch this live as well. And also thanks so much to everyone who liked this live on X, who retweeted this live on X, and put a comment outside the video on X as well. Thanks so much to everyone on YouTube who's liked this video as well. Good night, Miles. Frankie, brother. See you tomorrow sometime as usual. Scott, see you tomorrow sometime as usual. Cal, see you tomorrow sometimes as usual as well. Lena, see you tomorrow same time as usual. I'll see everybody tomorrow. Same time as usual, 11:25 p.m. UK time. I know you're busy, bro, but please check out the DM whenever you have time. Yes, I definitely will, Cal. No problem. I'll see everybody tomorrow. Same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. It's great to be back. Let's go CMF. See everybody tomorrow. Same time as usual. Good night, Miles and